And this to me is where a lot of the money's made. Like imagine you went and bought some eggs at the grocery store, and then you go back a week later and those same eggs are 30% less. You wouldn't think to yourself, oh, darn, I overpaid for those eggs. You'd probably just think, oh, great, you know what, I buy some more eggs and now they're cheaper. The same thing applies to the stock market. That's why I've never understood why people panic so much when the stock market goes down, or they think it's an apocalyptic scenario that we're never going to be able to recover from, because history has shown us, time and time again, that the market eventually will recover. In my honest opinion, I think the biggest risk with this market is for people who panic sell, for those who decide not to invest, or for those who invest in very risky assets in hope of making a lot of quick money, but instead they can't afford to stomach the losses. In those cases, yeah, you might actually have legitimate problems, but for those who stay employed, keep their plan as usual, and continue buying in despite the lower prices, long-term history has consistently shown that you're going to be just fine. Not to mention, price drops like this should really be seen as one of the biggest opportunities out there. For instance, in a weird way, the 2009 Great Recession was a once-in-a-lifetime buying opportunity for people to buy into things that they never would have been able to otherwise. Like I bought full-on houses in California for $70,000. Seriously. Houses. Stocks were also trading at a fraction of the value that they are today, and I actually remember buying Ford stock in 2009 for $2 a share. Real talk, not enough people are saying this, but riches are made in recessions. Now, we shouldn't try to time these recessions, but when they do happen, it shouldn't be a spooky thing. You should just be looking at this as 100% amazing opportunity. In my mind, now is the best time to take a proactive approach to your finances by living below your means, going through your expenses, cutting out anything you don't absolutely need, and then seizing whatever opportunities in front of you. If people ask me today if it's a good time to buy into the markets, I would argue yes, as long as your time frame is the next few decades and you have a consistent income to stick with your plan as usual. And don't get me wrong, I have no idea what's going to happen in the future. Maybe the markets go up another 20% from here, or maybe they go down another 20 to 30%. I have no clue. Just place a strong emphasis on staying employed, keeping your expenses low, beefing up your emergency fund if that's something you need, and then carrying on the usual plan to dollar cost average long term. If anything, just view this as a test of your willpower, not to panic and not to get ahead of yourselves and get emotional when the market's down. And lastly, as our almighty investing savior Warren Buffett said, be greedy when others are fearful, fearful when others are greedy, and smash the like button for the YouTube algorithm if you haven't done that already. So thanks so much, and also make sure to leave a comment down below because I'll do my best to read and reply to as many of you guys as I can. And thanks again until next time.